Brian Shannon from alphatrends.net. Today's Friday, the 12th of June, and we had a little bit of a pullback here in the market this week. So let's just take a look at the charts and assess the damage. The S&P 500 came down right to its 200-day moving average. We've also got a couple of other important levels in this area. So let's look at the 15-minute chart. Actually, let's look over at a 65-minute chart. This is just a little bit cleaner look. So first, we have the volume-weighted average price from the April low, the March low, of course, the April 1st volume-weighted average price, the May 1st volume-weighted average price, and the June 1st volume-weighted average price. So you can see that we came down to the volume-weighted average price from the beginning of May. We also have a trend line in this area. If we take these lows and connect them, you can see that we have a trend line. So it kind of tells me that we're likely to see some support, further support in this area. If we take a look at the Fibonacci off of the most recent leg, that's about a 50% retracement as well. I'm not convinced that the selling is over, however, because the main indicator I look at for the intermediate term trend, as you know, is the 5-day moving average. That's the orange one, and that of course is declining. So when we have a declining 5-day moving average, we look at the market as guilty till proven innocent, meaning it's just going to need to prove itself here, and it's going to take some time to rebuild before it can decide whether or not it wants to go higher once again. In addition to the 200, we also have the 20-day moving average that's right there. So kind of a lot of things came together: a trend line, some volume-weighted average price levels, and some bigger moving averages. But going back to the shorter term time frame, again, declining 5-day moving average means guilty till proven innocent. So next week, I think you want to just have a cautious tone. Same is true for the NASDAQ. We're below the 5-day moving average there. This is an important level that we had been talking about, 233 to 235. And, here we came down into that range, and so far have found buyers there for the NASDAQ. If we back it up to a 65-minute time frame, you can see that the volume-weighted average price from the May low is where we tested late May and then again here this week. So, here we've had this market riding along the rising 20-day moving average. It continues to do so. And of course, we had a breakout to all-time highs, but we pulled back in here. So I think the market is going to need some further time at a minimum to correct, if not further price action. So the big theme for next week is caution. The Russell 2000 really came down pretty hard, but right to the prior volume-weighted average price that we've been looking at from over here. And we can see that we also have the prior band of resistance in this 135 area. So when we look down to the 30-minute time frame, we're right at the volume-weighted average price from this peak, which we'd previously referenced. And, it's looking like this market, again, below declining 5-day moving average tells me that it needs at least some time to heal in here. Semiconductors did, break to new all-time highs this week and then pulled back to their rising 20-day moving average. So, they're still in a primary uptrend, but they are in need of some digestion of these gains, whether that's going to occur as further price correction, or if we're going to see some more horizontal time correction. That will be up to the market to tell us. But while it's below a declining 5-day moving average, we don't want to enter any market, in my opinion, until it starts to see that 5-day moving average trend flatten out and begin to turn higher once again. Biotechs have, come back down to the bottom end of this range. I've been saying they're kind of a waste of time in this range, and we came down slightly through the bottom end, took some stops out today, and tested the 50-day moving average. So that type of action often occurs near a turning point, meaning that it cuts through that prior support, touches some stops off, and then often will reverse. Just the opposite of what we saw in, of course, that we've been talking about in the financials. From this failed breakdown here came the fast move higher, and it came right up to the 200-day moving average, and then came right back down to the prior band of resistance. So, there is structure to this market if you're paying attention and looking at it objectively. The financials, still, they're below the declining 5-day moving average. They're in an important area. Let's see if they can continue to settled down in here. Some of the stocks that I'll be looking at next week would include Apron, APRN. This is, Blue Apron, of course. And if you look at the action since the Corona, run, basically, is the way I look at it, it's right at the volume-weighted average price from where that move began. I think next week what we want to see is probably something along the lines of run up towards this, make a higher low, and then perhaps break higher. I'll also have an eye on Bill. And these are some of the stocks I had mentioned in the webinar I had done Wednesday evening. If you're watching this on YouTube and you're not following me on on Twitter, at Alpha Trends, that's where to find this information and where I promote them. But anyways, over to Bill. This one, it looks to me like, it kind of did what I wanted it to do today a little bit, but I didn't get involved. I think Monday, I think we want to see it pull back a little bit, and then if it can continue, make a higher low. We don't want to buy a pullback. We want to buy after a pullback, and then as it begins to rally once again, that shares of Bill look like they're able to possibly make some trend continuation. Another small stock I have an eye on is Fluidigm, FLDM. You can see it ran up on big volume, and here we are. The volume weighted average price from the low we're holding, as well as the 50-day moving average. It's still below the VWAP from the peak, so it's going to need a little bit of work. I think that the way to trade this one is if it does something like this, then we would want to buy a break above that level. These are the types of setups I provide to stock ideas, that is, to Alpha Trend subscribers each and every day. Fitch, FTCH, we've traded this one successfully before, and here it's looking like it has the possibility to possibly get going once again here. So I'd say keep an eye on that one, maybe above this little peak in here. I give specifics at Alpha Trends for subscribers. Fiverr, FVRR. This one, it's pulled back on the daily time frame, and it's consolidating and hasn't had any bounce yet. I think we're still probably a couple days early. It might kind of do something like this, and then I would want to purchase it maybe right here with a stop under this level. I would also keep an eye on WRTC. This one got going in here nicely today, but right up to the volume weighted average price from the beginning of the month. So I'd like to see this one pull back and then maybe get going. You can see on the bigger picture that this is an important breakout, which it did hold above. So looking to the daily time frame, it bounced right from the 20-day moving average. New purchases in here would be extended, so a pullback I think would be first. And WTRH is kind of another one that is kind of a coronavirus type of play. This is Wader Holdings, and the volume weighted average price from this peak you can see is overhead. So it's holding the volume weighted average price from that high. Now it's building energy for possibly a move higher next week. Maybe someone of you guys can post it on your Robinhood board and get it going. Anyways, have a good weekend. Thanks for tuning in.